Is the STEM stock price about to explode up to $11 or is it going to fall back down to 30 cents? That is the question we are going to be answering in this video. Looking at what analysts think about the future of STEM, we can see that they are currently either a strong buy or a hold. None of them have sell or strong sell as their current position. Looking at the price targets, we can see that the lowest forecast is 30 cent and the highest forecast is $11. This is quite a big range, and when we see a range as wide as this, it usually means we are looking at a high risk but potentially a high reward company. And when thinking about investing in a company like this, it is critical to lower your risks as much as possible. There are multiple ways to lower your risk. Let's go back to the chart and I will explain what these ways are. One of the ways to lower your risk is to get in at a good entry price. And to figure out what a good entry price is, we can use this Fibonacci retracement tool. So if we have a look at the price here, we can see that the price went from these lows up to this high before it started retracing. When stock prices start retracing, they usually find support at one of these Fibonacci levels, and STEM has currently been finding support at this one. So a good price to buy would be around this Fibonacci level, which is around 60 cents, and it's also the current price. That's one way to enter a stock at the support level, but my preferred strategy for a riskier company like STEM is to enter on a pre-breakout entry. And the way that works is if we have a look at the previous resistance level, which was seen around here. So if I put a marker here, we can see that this area has acted as resistance before, suggesting that it's going to be difficult for the price to break above this, which means price could be consolidating around this area for a long time before it breaks out. The way to avoid being trapped in this consolidation period is to look for a specific price action pattern, and that pattern looks like this. So the price could be consolidating around here for a while, but once we see it break out of this resistance level, we want to wait further for the price to come back down to around this area. And once we see this, the next thing we want to see is some bullish movement. So when the price starts going back up and uses this resistance level as a support level, that is the ideal time to enter when using a pre-breakout strategy. So this price is around 88 cents, which is a bit higher than the current price, but the advantage you get when you make an entry like this after seeing a pattern like this is that there is a significantly higher chance of a breakout happening in the near future after this point. So those are two ways you can minimize your risks during entry, but the entry is only half the battle. You also want to think about your exit strategy. And there's another tool we can use to figure this out. It's called the Fibonacci extension tool, which is here. And if we do something similar to before, going from these lows up to this high, but pulling it down to where this retracement has found some support, which is here, and we get something like this. Usually when the price starts moving back up, these are the levels where price tends to find resistance, and some investors like to use these levels to lock in some profits. So what are these levels? The first level we may see some significant resistance at, and where you might want to consider taking some profits, is this level, that is $1.25. The next level is around this area, which is $1.64. The next level is $2.79, and the final level here is $4.14. Locking in some profits around these areas is another way you can minimize your risks. By locking in some profits, you are less impacted if the price reaches one of these levels and has a huge retracement. If you've enjoyed the video so far, please consider hitting the like button and also subscribing to the channel. I make videos like these every day. And it's also worth mentioning that I'm not a financial advisor and this is not financial advice. This is for educational and entertainment purposes only, so please ensure you do your own research and your own analysis before making any investment decisions. That brings us to the end of the video. Thank you for watching and I will see you in the next one.